Welcome, everyone. So today, we're going to zero in on something that most of us see almost every single day, but probably never give a second thought to: sales tax. But here's the thing. From a business perspective, that line on the receipt isn't just a few extra cents. It's a test. How a company handles this money, this specific liability, it can tell you almost everything you need to know about its financial health, its operational discipline, and even the integrity of its leadership. By the time we're done here, you're going to see how this one simple line item is actually a critical indicator of whether a business is truly built to last. So let's start with a really simple scenario, one we've all been a part of 1,000 times. Imagine you're just buying a cup of coffee. You pay the price on the board, plus that little bit extra for tax. Seems straightforward, right? But what's actually happening from the coffee shop's point of view? In that exact moment, is their only job to sell you a beverage? Or is there something else going on under the surface? Something much, much more significant. And the answer, of course, is yes. The business is absolutely playing two roles at the same time. It is a seller, for sure, but in the exact same instant that sale is made, it also becomes something else: an agent for the government. Now, I want you to really think about what that means. The business becomes an involuntary, unpaid, and legally bound tax collector. This isn't something they opt into, it's a fundamental obligation of doing business. And truly understanding the weight of this second role, well, that's one of the first and most critical tests for any manager or business owner. Okay, so let's get into the mechanics of this. To really grasp the implications, we have to speak the language of accounting. We're going to take the formal textbook definition of sales tax payable, and we're going to break it down piece by piece. You're about to see that each one of these terms isn't just academic jargon. It's a very precise instruction for how to manage a business responsibly. Now, take a look at this definition. On the surface, it seems pretty simple, almost deceptively so, but I promise you, every single part of this sentence is absolutely critical. Collected from customers, on behalf of the government, and crucially, recorded when the sale occurs. You see, these phrases are the entire foundation of what we're talking about today. They aren't just describing a situation, they are prescribing a set of actions. They are the rules of the game. So let's break them down. The first key term here is right in the name: payable. In the world of accounting, anytime you see the word payable attached to something, accounts payable, notes payable, sales tax payable, it's a massive signal that you are dealing with a liability. So what is a liability? It's a claim that someone else, an outside party, has on your company's assets. It's a debt. It's a future obligation. And by classifying this from the get-go as a liability, you are building a mental firewall. You are formally acknowledging that a piece of the cash sitting in your bank account is not yours. This isn't just bookkeeping. It's the first step in sound financial discipline. And this right here, this is the absolute heart of the matter. On behalf of the government. Let that phrase sink in for a moment. The sales tax money that a customer hands you, it never, not for a single second, belongs to your business. You are simply a pass-through entity, a custodian. The government has essentially deputized you, your business, to act as its collection agent. So while that cash might physically be in your bank account, commingling with your own funds, it is not your revenue, it is not your profit, and it is absolutely not your working capital to spend. It's a trust fund, and you are the trustee. Okay, now let's talk about the timing. The definition says recorded when the sale occurs. This points directly to one of the most fundamental principles in all of accounting, the accrual principle. This concept is so important. It says that we recognize and record economic events when they happen, regardless of when the cash actually moves. So the moment a customer agrees to buy that product, even if they pay with a credit card and you won't see the cash for 2 or 3 days, that liability to the government is created instantly. And this is vital because it ensures your financial statements give a true and fair view of your company's financial position in real time. They reflect your obligations the very moment you incur them. So we've established it's a liability, but what kind of liability? Well, it's classified as a current liability, and that distinction is absolutely critical for a decision maker. Just look at the difference here. A long-term liability, like a big bank loan for a new factory, that's something you deal with in your long-term strategic planning. A current liability, on the other hand, is part of your right now, day-to-day operational reality. It's due soon, typically within 1 year, and for sales tax, it's often due every single month or every quarter. This means you can't just set it and forget it. It demands constant, frequent management because it has a direct and immediate impact on the cash you have available to run your business today. Okay, now that we've really decoded the terminology, let's make this whole thing tangible. We're going to follow the life cycle, the journey of a single tax dollar. We'll trace its path from the moment it leaves the customer's wallet, as it moves through the business's accounting system, and then finally, hopefully, to the government. This is going to show us exactly where things can go right and where they can go very, very wrong. Let's walk through this process. Step 1, collection. Easy enough. Your customer pays you, you collect the cash. Step 2, recording. This is where the discipline starts. In your accounting system, using double-entry bookkeeping, your cash account goes up, your sales revenue goes up, but you also create that brand new account, sales tax payable. The liability is now officially on your balance sheet. Step 3, holding. Now, I want you all to pay close attention because this is the danger zone. For a period of time, maybe a few weeks, maybe a month, that tax money is sitting in your general operating bank account. It's mixed in with your own money, and that is where the temptation begins. Finally, step 4, remittance. The due date arrives, you send the money you've collected to the government. On your books, your cash account goes down, and you decrease the sales tax payable liability. The account goes back to zero. Your obligation is fulfilled, and the cycle is complete. And that brings us to the real reason we're having this discussion today. We've talked about the what and the how. Now we need to focus on the why. Why does this one specific liability deserve so much of our attention? Because as a manager, as a future business leader, your ability to handle this process correctly is not just some back-office accounting task. It is a fundamental test of your competence and your leadership. And failing this test can have absolutely devastating consequences. I want you to really put yourself in this situation. You're a new entrepreneur, maybe a new manager. Your first quarter was a massive success. Sales are way up, you log into the company's online banking portal, and you see a big, beautiful number staring back at you. Your first reaction? Pure excitement. Relief. You're thinking, wow, we are flush with cash. But I'm here to tell you that feeling, that perception of wealth based on a single number in a bank account, is a trap. It is a dangerous financial illusion that has led countless well-meaning businesses straight into disaster. So you're looking at that big cash balance, right? And the ideas just start flowing. This is great. We can finally afford that new piece of equipment. Or let's double our inventory order for the next quarter. Maybe even it's time for some employee bonuses. You start making these critical spending decisions based on the cash you see. But the disciplined manager, the successful one, stops. They take a breath, and they ask a very simple but incredibly profound question before they do anything else. Of all the money in this account, how much of it is actually ours? Because if you fail to ask that question, you will inevitably fall into one of these traps. You start treating that tax money as revenue, which completely distorts your performance metrics and leads to terrible decisions. Or worse, you use it to cover operating expenses. You pay rent with it, you make payroll with it. What you're actually doing, in effect, is taking out a very high-interest, unsecured loan from the one entity you never, ever want to owe money to, the government. And make no mistake, they will come to collect their money. The penalties are severe, they can shut your business down, and they have the power to do it. This isn't just a simple accounting error. It is a potentially business-ending mistake. So if you only remember one thing from our time today, let it be this. Managing sales tax properly is not just about bookkeeping. It's a direct, measurable reflection of a manager's discipline and a company's overall integrity. When you analyze a business that handles this process perfectly, they track the funds, maybe even keep them in a separate bank account, and they pay on time every time, you are seeing more than just good accounting. You're seeing a well-run, disciplined organization that understands its obligations and manages its cash flow with precision. It's a powerful signal of competence that radiates through the entire organization. So I will leave you with this final question to think about. If a manager or an owner can't be trusted to properly handle money that legally belongs to the government, how can they possibly be trusted to responsibly manage the money that belongs to their investors, their employees, or their suppliers? This isn't just an academic exercise. Understanding and mastering sales tax payable is about so much more than getting the numbers right. It's about demonstrating the discipline, the integrity, and the foresight that are the true hallmarks of a real financial leader. Thank you.